Very good evening, everyone. Welcome to the weekly recording sessions for you. And as usual, we are going to talk about the Singapore stocks. This week, I've decided to exclude the US discussions for the time being, right? We are going to focus a little bit more on the Singapore stock first until I work out something that I find is more suitable to have the US discussion. Okay, so without further ado, let's take a look at the Singapore market. Okay, let's start with STI. We are looking at STI chart on the screen right now. And we have this index pulling back at the low right now. Its crucial support is actually at this level around 3145. The thing is today we don't see it going to that level. So this means that we still have chance to turn things around. Now, today's candles is actually quite encouraging because in technical terms, we call this a hammer. And if this hammer turned out to be something like this, where it led to a rebound, then we may see some. So if the rebound were to take place, the resistance to watch right now is around 3235 level. And if this resistance can be broken, then we may expect a more upside. So the index do looks okay for now, but I find that a lot of Singapore stocks has not been looking quite good in terms of their chart movement. So we'll go through one by one, sector by sectors. So let's start with the banks. We are looking at DBS, and DBS has two consecutive pullback after announcing a blown out revenue. It has started to pull back as we see that this counter retest the support level, which was the previous resistance. So if this counter rebounds, of course, it can help STI to go up as well. So if this support level holds and this counter rebounds back towards its high, its resistance level right now is around 3011. Okay, the trend remains intact. The support level is a very attractive level for entry if it can hold, especially if it can hold a base over here. It can form a base. Something, the base when I refer to, I'm referring to is something like this, something like this. Okay, so if this base can form again, then we may see a more meaningful rebound. OCBC, we have it looking still strong, especially if you look at today's candle, it is a nice white candle, a meaningful white candle as well. It has a high of this around 1230, around 1233, around there about 1232, and there is no significant weakness as yet, as the sellers over here, as you can see on this long upper shadow on this candle, has not led to more selling. So what we can see is that if this counter continue higher and break above 1233, of course the trend will continue. How high is going to be the next resistance for this OCBC is that it can clear 1240, the highest level, then we may be expecting an all-time high level, and that is a sign of course, extended bullishness for the banks. UOB, similar to OCBC, is actually, in fact, I beg your pardon, is similar to DBS. It's actually sitting at its previous resistance support, and with a potential to rebound, especially if we can form a base something like this. something like this, then the reason to clear is around 26 or 2670, okay, 2678, around there. Okay, if it can clear that level, it will probably hit the all-time high level as well, similar to the OCBC as well. Now, the things to take note this week is that UOB and OCBC, they are going to announce result on the 6th and 7th this week. Can't remember exactly which bank is going to announce first, but of course I'll keep you posted in my email. I'll mention it when I do my write-up on the index. Okay, so when they announce good results, of course, it is likely to help them to rebound or rally further. So this is a point to note for you. Okay, so the banks looks okay. Seems like SDI has a chance to rebound next few days. Of course, it depends on the overseas market. As we can see that the pretty mixed market out there with last night, NASDAQ was pulling back negative, but Dow managed to rebound from support level. S&P managed to stay at the top. So there's a little bit mixed here and there. So Singapore start to experience some selling. Why? Because we have rising COVID cases, and there are more tightening measures in May this month. I think is on the next few days. I think 13th of May or something like that. So got to reduce the gathering numbers again. So we have to take note and take care of ourselves, especially when you travel out there. Okay, now next I'm going to move on to the tech sector. We are looking at AEM, which is the top of the day. It has dropped quite drastically today with a severe gap down. Right? The reason being is because the result missed expectations. Okay, so this resulted in a severe selling with a high volume over here. Now, we can expect more downward movement if it fail to hold at this level. This support level over here is around 380. So if it cannot rebound from this level the next few days, the next crucial support will be around 354 thereabout. Okay, so what most important things to look out for is that is this counters able to fill up the gap over here? If it can't fill it up, right, it may need more effort to do so. So basically, if that happened, we expect some lower action where it may form a base before it start to go up higher. Right. So keep a lookout on the next potential movement for AEM. Of course, AEM, as the selling pressure has overspilled to the other counter as well, with Frencken moving lower to test its support level as well, and almost broken it today. So this support level at 151. It doesn't look very bullish for Frencken for the time being, as it looks like a top-ish patterns over here. So if 151 support level break, do take note. The next crucial support is around 145, where it was a previous resistance tested 3 times before the eventual breakouts took place. So for those who have profit, do watch out for your profit, lock in some profit if it doesn't hold above 151. UMS is the most positive out of the 3. If you are looking at the counter, no doubt there are some pullbacks for the past 3 days. These are market sentiment, but the volume wasn't as high as its breakout volume. Forms a hammer over here. Of course, with this, it makes me wonder whether will this counter rebound from this support level. So this support level is actually at the previous resistance. As you can see over here, it was this resistance was tested many times, and now it has been tested as a support and managed to hold on to this level. And there are two attempts to break down, but every time it managed to close above or at the 1.39 level. So what we need the next day is a white candle closing at 140 or 141, then it will be an encouraging sign, which may suggest that the counter may rebound back to around 1.48 level. Okay, so watch out for the next day's candle. So if tonight Nasdaq doesn't do well again, and it resulted in lower opening in all our counters tomorrow, it will be good to see that if UMS is able to fight back and close at 141, that is a very clear entry, and of course we may see more rebound coming. Of course, disclaimer still apply. This is not an advisory, just some technical discussion to see some confirmation for some rebound to happen. NanoFilm, ever since the announcement of the bad news, it had been on a selling mode, quite a drastic selling from the high of 550 to all the way down back below $5. So it is quite a drastic movement for this NanoFilm. As of now, there is no sign of rebound as yet, as this candle that may suggest the counter may rebound or suggest that the counter may rebound, it not actually help the counter rebound, as the next candle turned out to be a bad one, a weak one. So this counter has its supports at this this support level here, where we are looking at around 4.84. The recent weakness of the tech from the tech counters are mainly due to the shortage of chips, and this delay leads to some cancellation of potential cancellation of project. So we are going to experience some weakness to track on like for these tech counters if it fail to rebound. So of course, the market will form a base and decide what's the next course of action. Hopefully, the shortage of chips can be resolved as soon as possible. Then we may see some surge in demand again, and then some rebound coming. So for the time being, just watch for the support level around 484. Let's move on to the transport sectors. We see some glimmer of hope where SIA managed to form a white candle over here. Then this is a support level that SIA has to hold, and SIA managed to hold a support level. So if this is a strong support that helps this counter to rebound, of course, the next day we would want to see a white candle confirmation over here, and then the resistance to meet is this level at around 535. But the other time when SIA managed to stage a rebound over here, I do anticipate some bullish movement, and it did, but I was expecting higher price action to around 550. But unfortunately, due to rising case in COVID, the market has decided to sell it down and push the counter back to its support level. So going forward, it is important to form a confirmation for this candle pattern over here. This is called inverted hammer. Then we may be seeing resistance getting tested again. Okay, so stay tuned for more action tomorrow. SIA engineering, we see a nice white candle closing, not quite really a candlestick reversal pattern, but at least the consolation is it managed to hold at support level, and we really needed to retest back this resistance at 239 so that it can turn a trend. Instead of forming a downtrend, it can go sideways. Then after that, eventually break out, go back to the high around here, around 255. Well, sets. Based on the downtrend, you can see the lower high and the lower low over here. Just do some illustration. So you see some lower high and lower low. And of course, today we see some more reversal patterns coming. This is a second reversal pattern, by the way. So yesterday was a hammer, but today failed to have a white candle confirmation. Today is like an inverted hammer, and what we want to see is that if we want a confirmation for these two candles pattern, we would like to see a white candle again. Right? We want to see over here a white candle confirmation, and they rebound back to the resistance over here. So once it goes back and retest this resistance at 422, then we have a high chance that it may potentially change in trend. But of course, do take note that due to the rising COVID cases or because of the variants, there might be some failure in rebound. So do be well prepared, right? So by the means of well prepared is that go in what we call using testing lots. So you don't go in full force. You go in a reasonable small size to see whether the market has formed the bottom, and then to be able to capitalize on the market rebound, right? Despite smaller size, but you still make some profit along the way, some decent profit along the way if the market rebound. Now, once the uptrend starts to form up, then you start to increase your size and pound onto the uptrend and right onto the uptrend. So let's see whether the transport, rather the airliner, can rebound. ST Engineering, somewhat related because they have ST Aerospace, to be more precise. It has been selling down and there's no sign of rebounding as yet. The trend, uptrend has been compromised. So we are looking forward for a new trend, and hopefully it don't take too long to form back its uptrend again. So for the time being, ST Engineering is having some support here at around this 379 level. Then we have some at around this 373 level around here. Okay, so let's keep a lookout on the next movement from ST Engineering. Let's talk about the property counters over here. We have city development looking to hold at the support level here. Okay, so there's a white candle. Surprisingly, it managed to turn out a positive performance today. And if any rebound were to take place, it has to test back this level. Okay, this resistance level over here. Such, then it has a potential chance to change its trend. Okay, CapitaLand, just on a little on CapitaLand. Unfortunately, there was, or rather surprisingly, there was some selling pressure over here, despite the deal. It may present an opportunity for those who haven't got into CapitaLand to have some position to capitalize on the year-end positive unlock of its value. Today, it has given the dividend of 9 cents, which are not supposed to be adjusted because they claim that the 9 cents is not part of the deal. But unfortunately, the market still adjusted for it. So if their claims is true, CapitaLand should rebound above this 9 cents to go back to its normalcy level. So we shall see whether it have done so. If not, if you continue to scale lower or move down lower, it may be a chance for you to buy where now, of course, the deal is still stands at $4.10, where you're going to get 95 cents worth of cash, then 0.33 or 0.35 cents worth of CICP shares. Then we are looking at the one-to-one exchange of shares from CapitaLand to CapitaLand Investment Management. Okay, so that will be coming in Q4 2021. Right now, take a look at UOL. UOL doesn't look very good as well. You can see this is a topish pattern where it has a breakdown over here. You see this counter topish pattern, then it has broken down, and it is right now below its support level down to the next support where it was a previous resistance here. Okay, so if it breaks this supports, continue lower, the next major support will be around here. Okay, so this major support has to hold in order for this counter to maintain at the high. If not, if you were to zoom out, there's a long way to fall if the support level of this level can't hold. Now, despite increasing cases of COVID, we do see some selling pressure in the gloves. So initially, I was thinking that with these rising cases, market may be focusing on the glove sectors where there are more demands coming up. So we have RIverstone to start with. You see RIverstone having to pull back to retest its low over here. Of course, by doing so, the supposed uptrend is questionable right now. The change of trend may be happening because we have same high, same low right now. Okay, so if it decided to range from this level, and watch for the eventual breakout and watch for the volume as well. UG Healthcare's is not as bad as RIverstone, but of course today it did not be a bullish movement or positive movement. It has to move up to clear 74 cents. So you can see that the gloves are not as bullish as I would think it is. Okay, no doubt there's some rebound during last week, but it still failed to clear its high. Top gloves are the worst of the three, as you can see. They were continuous selling, and this counter apparently did not manage to hold at this previous winter support. If it continue to do this type of selling, the support at 172 may be tested very soon. As such, once it tests 172, there may be a new trend coming. So watch for that new trend as well. So there isn't any nice chart for this top glove, RIverstone, or UG. So really, we got to wait for a nice chart coming. Then it gives us a more confident entry. For MedTechs, similar, you can see that it failed to move higher, especially when it moved to the level over here at around 115. You keep seeing rejections, price rejections, where you keep pushing it lower once it touches a level and then eventually close lower. So the uptrend is questionable right now. Okay, so just continue to watch on for a better entry. Then we have the palm oil. It is really a surprise to me where Wilmar announced a very fantastic set of results. We see heavy selling over here, and then even more heavy selling yesterday. Okay, so today we have seen some reprieve from this counter where it opened higher, but it didn't manage to close even higher. This is a doji. No doubt it is a reversal pattern. We do really need a white candle confirmation to see this counter rebound back to where it's supposed to be, which is around here or even here. Okay, so the next few days will be crucial for this counter, where it must go above 510 and then eventually hit back to 540, then it can resume back its upwards momentum. First resources, surprisingly looking still bullish, in the sense that we see the lows getting higher, especially when you come to this low, it managed to rebound today. The next step is to hit back this resistance level. Then we see this resistance level breakout to hit the next high, which could be easily around 160 range level. But most importantly, for the next few days, watch for 155 to be tested or even broken. Bumi Tama managed to hold at the support level as well. The rebound to bring it to 485 and break up from there could lead to a more upward movement. Okay, so just keep a close eye on it. Next, we talk about FortressMineral. It has been very bullish, very strong upwards momentum over here. Then we see some pullback with declining volume. Next is that if this counter can turn out and end higher with a white candle and retest this level at around 60.5 cents, then we may see more upward movement if we can break up. So then this flag pattern will have a nice breakout, and if the market remain bullish on this counter, then we can do a projections over here where we may see more upward movement to 655 around there. Okay. Next, we're going to talk about green energy. Over here we have Sembcorp Industry, which you can see from the chart that it has pulled back and formed a hammer at this 20-day MA. Of course, there are some mixed signals over here, as some who follow MACD may comment that, hey, MACD bearish crossover. But of course, this MACD bearish crossover is quite common, especially when the stocks is bullish and a bullish trend. Now, you look at this pullback, there's MACD bearish crossover. Look at this pullback, there are almost bearish crossover from MACD, but eventually every rebound led to a rebound from the MACD lines as well. So similarly, we need that to happen for Sembcorp Industry. So the next day, a rebound or white candle confirmation should do it. Okay, so we like to see a white candle confirmation above this black candle. This morning I commented about Sembcorp Marine, so I'd like to add on to this. As you can see, it is consolidating in a sideways range, and let's just draw a box over here. So if I were to draw a box over here, you can see that this counter is consolidating and a rebound is needed. So rebound back to this level around 225. I can help this counter to either change the trend by breaking out, or at least it keeps it in this sideways. So if this counter were to break below this low, 193, then we may see more downward movement to around this range. Okay, so this is this week video recording. I hope that you enjoy it. I will see you next week, and of course I will come back if I have more things to share, especially let me think about the US market again. Okay, so good night to you, and have a good week ahead.